Today I want to talk with you about car and truck expenses. Those are some of the most commonly deducted expenses that I see on tax returns. Depending on the type of business you're in, if you're in real estate or some type of business where you spend all day in your car, then that can be very most likely the largest deduction on your tax return. But you can deduct your car expenses in one of two ways, either using your actual expenses, the percentage of business use that is, of those actual expenses, or cents per mile method. Well, to calculate the actual expenses, you would we talked in another video about keeping good records. Well, some of those good records that you need to keep is how much you're driving for business purposes. So I would advise going down to your local office supply store, Staples, Office Depot, Office Max, wherever you like to go, and get a little log that will track how much you're driving every day. Or if you're more technology savvy, there are some apps on your iPhones and Droids that will help you track what your business miles are. If you're good about logging it in, it'll use GPS to show what your miles that you drove for business purposes are during the day. IRS will accept that as long as you're keeping it with that consistently. Now, if an IRS were to audit you, they would want to see what your records are to support your business miles. They would want to look at your calendar. They would want to see who you've been meeting with, where you're driving, why you're driving there, that sort of thing. So keeping up a log will help substantiate what your business miles are. So once you have those business miles, you would look at that as a total of the miles, as a percentage of the total miles that you drove during the year. And let's say that's 75%. You would then multiply that 75% times all your actual auto expenses, including fuel, repairs, maintenance, oil changes, tires, tags for your car, basically all the expenses that it takes to run your car, including depreciation. The cars are depreciated over 5 years. They are subject to, some cars are subject to what they call luxury car rules, where they're only allowed to be a certain amount deducted per year. That amount changes every year. Some vehicles aren't subject to that limit, such as heavier trucks. Full-size pickup trucks aren't subject to that limit. So if you're wanting the biggest tax deduction, may not be the most economical fuel-wise, but at least from a tax standpoint, the largest deduction will come from those larger vehicles. There's an SUV rule. If it's over 6,000 pounds, like a large Escalade or Tahoe or those type larger SUVs, you can deduct up to $25,000 in 1 year times the percentage business use. So keep that in mind when you're shopping for a car for your business. That different cars will have different limits that you can deduct each year. But alternatively to the cents per mile, to the actual expense method, is the cents per mile method. That amount also changes every year, and you would say your total business miles times that cents per mile, and that's how much you could deduct. Now, in addition to the cents per mile, you can deduct for parking, for tolls, and also the interest on your car times the percentage business use. So again, yet another reason to keep good records if you can keep those, even if you're taking the cents per mile method. You won't have to keep all your receipts for fuel and tires and repairs and maintenance, because those will not be deductible on the cents per mile. The one thing to consider when you're deducting the amount of business miles is driving back and forth from your home is considered commuting, and that is not deductible. So now once you leave your home, get to your office, and then you leave and drive to other locations after that, then that is considered business miles. If you have a personal car that you're using in business, it's best to keep those business the car expenses paid out of your personal account and just submit a business report, expense report. I often see it gets messy when you have a personal car and then you have running all your car receipts through the business, then it gets messy that way. Just again, think of how the car is owned. If you own it personally, pay those bills personally, the gas, repairs, maintenance. And again, submit whatever the business portion of it is to your company to reimburse you. Much cleaner on your accounting records. Alternatively, if you have a car that's owned by the business, but you may use it some for personal, there's one of two ways you can handle that. One is you can limit the amount of deductions on the business return times the percentage of the business use, or you can include the personal use in your income of the driver. One of the two ways, either way would work. And one thing I've heard several people say, well, I'm just going to go put one of these wraps around my car and make it a rolling billboard and be able to deduct the whole cost of the car that way. Well, that doesn't work. You can deduct the cost of putting the wrap on the car as a business expense, but that doesn't just all of a sudden make it 100% business use. You still have the percentage business use rules apply even with the wrap around the car. But there are a lot of covered issues that relate to car ownership and how you use it in a business. And if you have any other further questions, I'll be happy to answer those. Just give us a call at SDA CPA Group.